What's going on, guys? It's Justin from Push and Profit. Hope everyone's having a beautiful day today, as always. So I wanted to make a short, simple, and sweet video. Short, sweet, and simple. I think that's how you actually say it. A video on like really some trading tips that have helped me on my trading journey and can possibly, and hopefully help you guys. Now, real quick, a little background about myself. I never paid anyone to take a course to learn how to trade, and I never had any structured learning when it comes to trading, right? Now, I'm not saying these are bad things. If anything, these are good things to have, obviously. I just never took that route. So, in reality, I'm very self taught when it comes to trading. I've been trading for a few years now. And with that, being said, me being self taught, I've obviously made a ton of mistakes, probably more mistakes than average, the average person, just simply because, most people, they really end up taking a course or really just have that structured learning from somewhere. And me, I was just kind of, try out, and whatever doesn't work, okay, jot that down, and what does work, jot that down, right? So with that being said, I'm someone who could really offer a lot of experience because, after so many times, eventually you do get it right, just like how being persistent, always works out in the end. Just like how, push and profit, what push stands for is persist until something happens. And that's really, the whole core and foundation of like what I embody in everything I do in life. I always am persistent. But with that being said, guys, so the number one tip, or not really the number one tip, but really the first tip that I want to talk about is to not place trades at opening bell, right? Now, this is honestly one of those tips that I've recently learned. This isn't something that I've learned a few years ago or a couple of months ago. This is something that's very recent, right? And the reason I just recently learned, and started taking notes of this tip is because, recently I've quit my job to day trade full time. So obviously now I could day trade, for the whole day. Before I worked at a job at the bank, and, I would bring my laptop to work and I would, trade on my lunch break, and then whatever days I had off, that's when I would trade, right? So I never had the opportunity of where, the stock market opens at 9:30 Eastern time and closes at 4 p.m. I never had the opportunity to trade that whole window, right? So it's very recent that I learned this, but, in these last couple of weeks, something that I learned about, trading early in the morning when the bell first rings is that in reality you can't really tell which direction the market is going. It's honestly I've had multiple trades where I traded at the opening bell and it worked out for me, but I've also had, a lot of trades where it didn't work out for me. And something that I learned is always, now I'm not saying what specific time you should start trading. I'm not saying trade at 10:30, trade at 11. That's not really what I'm saying. What I'm saying is that for me personally, just trading at the opening bell just doesn't work out really well. And that's just because you can't honestly tell the direction because, yeah, you could see what happened previously yesterday or a couple of weeks ago, but, or you could look at what happened in the pre-market. But honestly, I'm someone who trades with the direction and the trend of what the stock is doing now. So I need that solid confirmation that, okay, things are going up. Because obviously, doesn't it make more sense if things are showing a sign of that they are heading up now to get in, and then map out your resistance to get out, or where you want to take your profits, then having something that has an unclear direction where it's like going up and down, up and down. And that's usually what typically happens at the opening bell. Things are just like unclear, right? So that's really one of those first tips that I've learned recently, and hopefully is something that you guys could take note of. Because when it comes to trading, also what you really got to think about is that time in the market doesn't mean more money, right? For example, traditionally when people work a job, right, it's hourly, right? Of course, with the exception of people who, work salary jobs, right? But for the most part, most Americans or individuals in general work a job where they are paid by the hour. So of course, if you start early and you get out late, you're gonna make a lot more money than just working a smaller time frame, right? But when it comes to trading, that honestly is like irrelevant. You could have more time in the market and lose more money than someone who like traded for like 10 minutes for the day, right? At the end of the day, you don't get paid more, you don't make more just because you traded for the full day. You make more just because you're making smart trades, you're managing your risks and things of that nature, right? So really, that's just something that I had to learn with this new window of me being able to trade all day. Just because I can trade all day doesn't mean I have to trade all day. Just wait for the right opportunities to present themselves. And often I find that when the bell rings and the stock market first opens up in the morning, things are unclear, right? Now, again, these are tips that you guys don't necessarily have to, follow 100%. At the end of the day, you guys have to do your own due diligence, see where works out for you. These are just kind of like a guideline, right? And, guidelines, you don't have to go straight by the guideline. It's just something to kind of follow, right? So hopefully, you guys do take what I say with a grain of salt and try to implement it into your strategy. Maybe before you start trading this with your real money, start paper trading. See if these trades work well. Find out your strategy, and then from there you could form your own guideline. But what I'm doing right now is I'm just showing you guys my guideline. Right now, the next tip that I want to talk about is just that something that I've learned over, and this is something that I've learned after a while, right? Is to really just look at a few stocks and really study how they move. Sorry, I had to cough. But really study how they move in the sense of how much do they move percent wise on an average or daily basis, right? Like for example, I know the S&P 500 before the whole entire pandemic, and things started getting crazy. Before SPY, the ETF SPY would move like 1/3% every day, and that's really just how much it would move. Like the max it would move up, or the max it would move down, with the exception of some days, right? And so recently, where like now SPY has been a lot more volatile. And when I say SPY, I'm referring to ticker symbol SPY. I just call it SPY. But it's been a lot more volatile, where now we could see days where it moves 3%, 2%, 6% in a day, But really, because I've been following it for so long, I'm able to notice when there are changes. Like for example, I said that before the whole pandemic hit, SPY would move like 1/3%. But because I've been following it for a while now, I know that 1/3% isn't really what SPY does anymore. It's a lot more volatile. I've been following it, right? And what happens when you follow only a few stocks is that you get to get really familiar with them, right? You get to see exactly how they move, your trend lines for them. Sorry, I'm still sick. But you get to draw trend lines that are more accurate, just because you're just like more familiar with how things move. You're like, okay, this is a resistance that's most likely gonna break. You just become so familiar with this stock, right? And now it doesn't have to be one stock, it could be a few stocks. Now the reason I recommend this, especially for beginners, is because something that I failed at when I first started trading was really just going all over the place, right? I was trying to learn how to trade penny stocks. I was trying to learn how to trade triple leverage ETFs. I was trying to learn how to trade blue chip stocks, right? And the thing is, like, all these different niches, they move in their own separate patterns. They move differently, right? So if you don't have the or the knowledge, or just becoming aware and familiar how a stock moves, and you just move on to the next niche, the strategy is going to be completely different. Like, there's so many different strategies in the stock market, and really you got to find your own niche and dominate that niche, or your own few set of stocks that you look at. I could trade a Facebook stock right now, but I could tell you, for a fact that Facebook stock is going to trade significantly different from like a micro cap stock, with like a penny stock, which could do like 300% in a day. Is Facebook ever going to do 300% in a day? Highly unlikely, right? So you got to map out your strategies based on what you follow. So that's why I feel like it's better to follow a smaller group of stocks, just because, like I said, you get to become more familiar with how they move. And I'm sorry, that's actually something on the camera, so I had to get that out real quick. I apologize if you guys it looked kind of weird. But yeah, so that's just really the second tip I really wanted to go over. Now the third tip that I want to talk about is about taking your profits when you can, right? Now there's a saying, and I'm not sure how to say the saying 100%, right? But you guys might get the gist of what I'm saying. But it's just something about how, offense doesn't win championships, defense does, right? And now I'm not saying trading is a sport. That's not what I'm saying. But in reality, you want to make sure that, yes, of course you want to have large wins, but in reality, the key is having small losses, right? Because it's a guarantee that when you're trading, you're going to have losses. You're not always going to be right all the time, right? But what I'm saying is that, or something that I tell a lot of people in the Push and Profit group, is that you're never wrong to take profits, right? Just because, you took profits here and the stock continued going up, did you lose? No, you didn't, because obviously you took your profits. You took what you thought was the top, and even you secured your money, right? Because obviously things could go the opposite way. Things could rise up, and you don't take your profits, and then quickly go down, and now you lose. You have a loss for the day, right? And it's like now you have a red day, right? And now you end up revenge trading because you're like, oh, I need to make that back, and just a whole mess of things that could happen. Versus when you trade more conservatively and you take your profits. Just take it when you can. It's never a bad idea to take your profits because you have your W, right? It's just be defensive, and be less offensive. Stop playing offense and trying to get those big wins, because yeah, those big wins are nice, but you know what's nicer? Consistently winning. So if you could just cut your losses quickly, then you'll have more consistent wins. And this is something that I could 100% stand behind. Now, again, like I said, you guys don't have to, I always encourage you guys to learn what works for you, but these are just tips that I wish someone told me, right? Now, number 4 is when things get volatile, shoot for smaller profit targets, right? Like I mentioned earlier, the S&P 500, or ticker symbol SPY, right, which is the ETF for the S&P 500. Before the whole pandemic occurred, it would move like 1/3%, and now I said it could have days where it moves 6% in a day, right? It has days like that, right? So now when things get more volatile, and especially with the whole Corona economy and things going on, definitely I could say that the stock market has been a lot more volatile than what it was last year, and that's the thing. The market changes, right? You just got to be able to follow the trends, identify, become aware with that. But once you do realize that things become more volatile, shoot for a smaller profit target, right? And now this goes back to take profits when you can. And the reason I say that is because, when things are volatile meaning, they go up and down way more than before. Before, up, down. That might have been the pattern, but now it's like up super high, down super high, up a little. It's just like a lot more volatile. Things get a lot more tricky. That's gonna, this is what I mean. Where you got to take your profits as early as you can, or just take your profits, because you could be up, especially in a volatile market, and things quickly change direction, and now you're down, right? So when things get volatile, again, shoot for a smaller profit target. If that's what it takes for you to be consistently profitable, then that's what you need to do, right? A lot of people are like, oh, okay, but like if I'm in it to make money, I need to make big money. No, like you could end up losing big money instead of making big money, and that's what I'm trying to say. Being consistent is overall always going to be better. Take your profits, because look at this. Even if you just have some small days, it adds up, right? And let's say you make $200 a day, right? I have a video talking about how to make your $200 a day, or how much you need to make $200 a day, which is why I say this number. But for example, if you make $200 a day, there's 5 trading days in a week. That's about 1,000, for the week, which isn't too bad, especially if you're not trading for the full day, especially if you can make that in just a couple hours of trading each day and have the rest of the day for yourself, for that financial freedom. Yeah, $52,000 dollars a year is pretty much average for a lot of Americans, but a lot of Americans that do make $52,000 a year, they put in 40 hours a week just to do that, right? So even if you like makes a small gain of just $200 a day, you're still making at least the average of every American, but with so much less time, where you could spend more time with your family. Maybe you could spend more time opening up a business, or just if you want to go into trading full time, just continue practicing, continue studying, continue paper trading, working on your craft and your strategy, right? So like I said, the small wins add up, right? And maybe you might have and it's not going to always just be small wins, because of course you're going to have your days where you do make big wins, right? So if you average it out, you're going to do a lot better if you just cut your losses early, because like I said, and let's say you have a week where every day was just a small win and you only made 200, that's still 1,000 for the week. Who's to say that next week might not be a better week and you'll make more, right? But that's only if you manage your risk and you take your profits when you can. Because again, like if you kept trading every single time looking for that big win, you might make that big win next week and have that big loss this week, and it averages out to nothing. Right? So that's what I'm saying. That's just what works for me. I'm someone who trades very conservatively. Like I said, guys, you don't have to follow everything I do to a T, but these are just tips that I recommend. Hopefully, you guys could, take a look at these tips. Maybe what I recommend is having a trading journal and look for criteria in the stock And always try to check off if a stock meets your criteria, and maybe just implement these tips into your trading journal as well. Just try to have that embedded in your mind, so that you don't make mistakes, because like I said, I'm someone who was self-taught how to trade. Pretty much I've learned trading from YouTube and from books and just experience, so I could tell you from my personal experience that I've learned a lot of mistakes over the last couple of years. And because of those mistakes, I've been able to develop what works and what doesn't work. And of course, this is something that like I'm never gonna perfect, because at the end of the day, like I said, the market keeps changing. So guess what? I'm gonna have to keep changing as well. But these tips that I recommend. There's almost like timeless tips. Like they're always gonna work, right? These tips, they're timeless. Like I said, when things get volatile, take smaller profits. That's timeless, because guess what? When the market becomes less volatile and things stop going crazy, you just adapt and reverse back. So that's why I believe these tips are timeless. Hopefully they can help you guys out. If you haven't done so already, make sure to hit that like button. It really does help with the YouTube algorithm. Also consider checking out the description below. I have a link to join our free Facebook group for Push and Profit. It's really a community of individuals who are interested in trading in the stock market, people who are interested in real estate, finance, just a whole niche and group of individuals who are really self-motivated and interested in entrepreneurship. So I'm just trying to gather a bunch of people together so that we could all communicate with each other, we could all engage, and at the end of the day learn from each other. I'm not sure if you guys have ever heard of something called social currency, and it's really that surrounding yourself with people who have knowledge in something that you lack in is always going to be better than surrounding yourself with people who are either at the same level or below you in terms of knowledge, or not even surrounding yourself with that circle, period. You want to have a circle of good people around you where you could engage and learn from. So yeah, go ahead and check out that link. And with that being said, guys, my name is Justin from Push and Profit, and I'm out. Peace.